traders, Raghee here. I have a rather ambitious video here for you today, and I think the timing is really important. And I titled this Momo or Oh No. What's Momo? Well, it's trader slang for momentum. There's a lot of strength we saw in the market today, so I want to start with probably the most important aspect of what we are dealing with. That is tomorrow's Powell event. We know that the markets are going to be watching very closely, not what he does with rates, but rather what are we going to see in the statement and in the press conference. Why do I say that? Well, we are absolutely looking at a quarter-point hike. There's no question about that. There is no expectation of a hold and a very small but fairly meaningless expectation for a half-point hike. So quarter point it is. This is where the rubber meets the road, though, and this takes us to the May 4 meeting. This is a very different look than we saw just 24 hours ago for the May meeting, which is what the March meeting is going to set expectations up for. Quarter point, yep, that's what this column would be. Quarter point hike, that's what this column would be. This is the half point hike, which is very slightly taking the lead. Now, we're way far from May the 4th. May the 4th be with you. We are way far from that, but you can see this is a more hawkish, much more hawkish expectation for what the Federal Reserve is very likely to do. So I'm going to once again reiterate what I've been reminding everybody in the rooms. The Federal Reserve is not staying up at night tossing and turning about Ukraine. They are staying up at night tossing and turning about charts like crude oil, like wheat, like corn, like beans, right? So let's talk about crude oil, because today's strength in equities, we'll get to that, seems to have woken up some buyers who are thinking the bottom is in. Let's talk about why that is not the case and what we can use data-wise, not my gut. As I like to remind my traders, we don't trade from our lower intestines, right? That is not what's directing our capital. The path of least resistance, let's start with crude. The path of least resistance for crude is actually still very much up because of a number of things. One, the trend that was previous to this little bit of volatility and chop was clearly up. The idea that backwardation is somehow undoing this uptrend is just categorically false, because between now, the April contract, to September, we have about a 9-point difference, still putting crude, I think, about $86. This is still a very profitable level for oil stocks. This is still a level that we will see very likely keep XLE, XOP, and OIH in uptrends. The big question is whether or not the shutdown in China and the oil coming online from Iran, which would be about 1.3 million barrels per day, is that enough to sort of send the supply narrative and crude oil to a lower level? Or is this just the way in which two major headlines, one supply narrative, one less demand narrative, created a much more, and probably it was due, right? Retracement. This is still very much a retracement in terms of most of 2022 being in an uptrend, which means I still very much like oil stocks, and yes, even the explorers. All right, so this brings us to the Nasdaq. It's another corner of the market that I'm looking at right now. Okay, so Nas had a big move to the upside. Well, what's big? Well, we made a new low right here, slightly new low, broke this Darvis. We haven't even reached the 13 exponential. Forget the 21. This wasn't even a reversion to the mean. So yes, there could be some higher highs. And if Powell sounds the least bit less hawkish, yes, we could see a rip in the Nasdaq. By the way, I hope that is what happens, because if we see that, I will happily once again short the rip in the Nas. That has been the gift that keeps on giving. Why do I believe we're going to continue to see more pressure on the Nasdaq? Gang, here are bonds. Equities might have ripped higher. This is a lower low, new low in bonds. This, gang, is a new high in the yield for the 10-year. Hard to be bullish tech. QQQ, Nasdaq futures, XLK, XLY, XLC, SMH, CLOU, SKYY. It is hard to be a buyer of tech in this environment. And why does that matter so much? XLK, this is Apple, this is Microsoft. XLK is the number one weighted sector in the Nasdaq futures, the number one in the S&P, and the number two in the Dow. You want to know where the markets are going? You keep an eye on XLK. Tech is a huge narrative. Apple and Microsoft will tell a big story. This is still a very shortable and intact downtrend. Gang, don't get too far ahead of yourself with today's strength. Right? We've seen some dramatic strength before get absolutely crushed. And unless we have a very different look on expectations for rate hikes after tomorrow's press conference, these rips will be shorted, okay? So like I said, there are paths of least resistance. It's up for energy. That includes natural gas and oil stocks. It's down for indices and many of the sectors that I just mentioned. So there are some terrific trends in place. Please don't go top picking. Please don't go bottom picking. Know the flow of the river. Engage it on these corrections. Tomorrow's FOMC hot zone could be a great opportunity. All right. So let's follow the trends. I'll see you tomorrow in Charts and Coffee, 9 a.m. at the Simpler Trading YouTube channel. And until then, gang, be good to each other. Find those trends. You can download the Grab Candles, which is predominantly how I'm gauging bearishness, which is predominantly red, bullishness, which is predominantly green, right? That's how we're measuring that. Go grab those Grab Candles from countdowntrader.com, and I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.